Good afternoon. My name is Larry Ray. I'm the President and CEO of Gold Ray Resources Corp., a company that trades on the TSX Venture Exchange and has the majority of its operations in China. We are currently developing a resource there with limited production at this time. Our goal is to increase this production up to about 1,200 to 1,500 tons per day. And to do that, we are negotiating with several Chinese companies, one of which will become our partner either directly into the company or into the project, which will allow us to move the project up to the desired tonnage. For further information, please visit our website at goldray.com or phone 604-531-9639.
Welcome back to the Money and Wealth Show. I'm Sterling Fox in conversation with Garth Turner this week. And Garth, just to follow up on that last segment in which we discussed housing realities across Canada, always attached to the house is the mortgage. Mm-hmm. And we've seen some interesting moves by the big Canadian banks lately. First, we had 3 increases, followed a couple of weeks later by a couple of decreases. Who knows what's coming next and what's behind this?
Well, the increases were big and the decreases were small. So we're still up considerably from where we were a number of weeks ago.
And I should probably say we're talking about 5-year fixed mortgages.
Yep, exactly. Yep,
by and large.
Yep, variable rates won't move until the Bank of Canada goes, and who knows when that's going to happen. Might be Tuesday, Sterling.
Yeah,
maybe.
Could be.
We'll see. There are some deflationary tendencies now coming out of Europe, and that may help convince the Bank of Canada that maybe they ought to wait a little bit. But if they wait, it's not going to be very long. So I do think that interest rates will continue to go up. So the main thing is, what does this mean to people watching the show? If you've got a variable rate mortgage and it's a good rate, prime plus a little or prime minus a little, do nothing. All right?
You're still comfortable with
that?
Yeah,
just wait, especially if it's a prime minus mortgage, because you're actually borrowing money at less than the inflation rate.
Right.
And that's like free money. So I think that just watch interest rates. They will be going up, but it's going to be little baby steps, and you're actually better off for a number of months now, maybe even a year, to stay where you are. If you've got extra money, don't give it to the bank. They got enough. They don't need it, okay? Take the money and put it against your mortgage principal. Pay that down with the extra money instead of putting it into those payments. If you're just shopping for a mortgage right now, I think you should still probably lock in.
Right.
Because if you don't have a chance to get a VRM, a variable rate, if you have to go fixed or you want to go fixed, or your wife's going to beat you up if you don't go fixed, then I think you probably want to get something around 4%.
Okay.
And there's lots out there.
So I had predicted a Bank of Canada interest rate increase in April, which you thought was laughable, and turned out to be just that. But next week, 1st of June, could be certainly by July 1st.
Yeah, I mean, Mark Carney, the governor of the Bank of Canada, has certainly been making all those big noises. He was going to move this coming week. Like I say, the European stuff may have backed him off a bit, but he needs to raise rates. If he doesn't, we end up having an inflationary problem at some point down the road. Here comes Mr. Carney now. So obviously, it's a serious issue.
We're on location today, friends, and it's probably pretty obvious by now. You're not a fan of the HST. We've had the Minister of Finance of British Columbia and the former Premier of British Columbia giving us the pros and cons from a local perspective of the HST. Why are you so dead set against it?
Well, I think the HST is a reasonable tax if you're a politician. And the reason is, when you tack on a provincial sales tax to a federal sales tax and broaden the base, so it's not just goods, but it's services now being covered by the 2 taxes, it's a cash cow. So governments love it. And if they need to raise this thing, it's really easy just to tack on another 1 percentage point. People are going to howl for a couple of weeks and they'll forget about it.
Right.
So it's a cash cow. And also for businesses, it makes them more efficient because they can now deduct the provincial tax, sales tax, which they couldn't before. And the theory is they'll drop prices. Right. And I got some
swamp water, some swampland in
I
Victoria.
got lots of it for you.
Exactly. Right, okay.
So I don't think that's going to happen. So it is something the government and businesses want, but we as consumers don't, okay? So the problem right now is that 60% of Canada's economy is consumer-based. And every time we give consumers a disincentive to spend, we hurt the whole economy. So I'm concerned it's the right tax at totally the wrong time.
You're a former National Minister of Revenue. You
admit it.
Perhaps more than most of us know the tax law inside and out. And in your book, Money Road, you dedicate a fair bit of ink to the whole matter of investing wisely, and that includes legally avoiding tax.
Yeah.
What are the best routes to look at these days, mid-2010?
Well, I would just mention a couple. One is the TFSA, the tax-free savings account. This sucker is absolutely a gift, okay? And it is not for saving money. It is for investing money. And if you're able to put something inside a tax shelter and have it grow free of tax and take it out at any time you want and put money in to make up money you've taken out, that's flexibility you'll never get with the RRSP.
Right.
So I'm really counseling people to make sure you maximize every dollar you can at the TFSA. That's great. Second thing, I really love the dividend tax credit. And as interest rates start to creep up a bit, we're seeing it already, the yield on dividend paying stocks, such as bank stocks, preferred stocks, is going up. You can capture a good 6+% now on those stocks. And you're going to pay 80% less tax than you would on a GIC because of the dividend tax credit.
Always good to see you,
Thank
Garth.
you.
Thanks for
Pleasure.
taking the time to join us on location here in North Vancouver. We'll be right back.
Good afternoon. My name is Larry Ray. I'm the chairman and CEO of Molycorp Gold Corp. As the name states, we do have a deposit we're developing in British Columbia, which is a pure molybdenum deposit. But our focus these days is on magnesium in Nevada. Through serendipity, we discovered a large deposit of magnesium running about 10% with a high purity and consists of about 256 million tonnes at this time, 52 billion pounds. Our main emphasis is to move this project forward by beginning a drill program later this year in which we can increase the integrity of the resources into the indicated and inferred, as well as increase the resource itself. For further information, please visit our website at molycorp.com or phone us at 604-531-9639.
Tax Tips with David Ingram.
Home buyer's plan. You can take out to $25,000 from your RSP to buy a new house. Let's pretend for the sake of argument you only took out $15,000 because you've got to pay back 1/15 a year for the next 15 years. Well, if you pay back $1,000 this year, that's okay. 15 years from now, if you pay back $1,000, that's like $400 now. But the better use of the money is this. Pay down your mortgage. Pay off your MasterCard. Pay off your Visa card. Pay off any non-deductible interest. I guarantee you it's a better return on the money than paying back the RRSP. That's a tax tip from David Ingram.
And that's our program for this week. Our thanks to David Ingram and to our special guest, Garth Turner. And thank you for joining us. If you have some thoughts about today's show that you'd like to share with us, please send them to comments@themoneyandwealthshow.com. I'm Sterling Fox. See you next time.
Comments made on the preceding paid commercial program are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time.